8.
In English, right?
English, yeah. Good morning, guys. This is Chris from KRT. I'm here with Kensington Title and Judith Campos.
Hi, how are you? Good to see you, Chris.
Good to see you too. I'm happy that we made it. We have a new year. And as I promised to you guys, we wanted to teach you a little bit about title, right? So more than to me as an agent, we know a little bit of much, but they do more business than we do, right? So I wanted to introduce you, la señora Judith Campos. Brevemente, you just tell them exactly what you do here, what's your title, what exactly you do for KRT.
Okay, perfect. And again, my name is Judith Campos. I manage Kensington KRT Title, and we're in Maryland, DC, Virginia, and now Pennsylvania. Just in case, now you could do Pennsylvania. So just to give you a little bit of background, I'd like to tell you first about 3 important documents: the note, the deed of trust, and the deed. They're 3 completely different documents. Sometimes people confuse them. So that you know, the note is the money you're borrowing. That's affecting your credit. The deed of trust is just a right to the mortgage company, well, to the lender, that they can foreclose on the property if you don't pay your note.
Okay.
And then the deed is the title to the property. That's like the car title. That says who the owners are.
And sometimes we don't know that, right? We don't know what we're signing and whatever not. But I want to start off really quick. Tell the audience a little bit about you, how long you've been KRT, the history of it, a little bit.
Too long.
I know you've been in business for a very long time.
So I've been in the business, it will actually be 20 years next year. And Kensington has been around since 2010.
2010. Wow.
Yes, and then our attorney, he actually did my first closing back in 1994. I'll say that quietly so you don't really hear it, but it was in the 90s. Really, really great guy, Eric Goldman, and he's always available for questions.
And I thank you guys. You guys also do a phenomenal job. You've been taking care of my clients long hours too as well.
Good. And we like to have, you know, a nice, smooth closing at the end. We like to make the client feel this is something that they're very happy to invest in.
And you know, some of the things that agents look for is to have no issues with any problems, right? So, and I think you guys do a great job on doing that.
Thank you, Chris.
And not because, you know, it's just not because I'm here doing it. It's just for the fact that some agents are not satisfied with the title companies based upon maybe performance and whatever not. But you guys do a great job. So my take on here today is for you to teach them. If I ever buy a title, right? What's the purpose of me buying a title insurance or you know, or what they call it also, lender's insurance too, right?
Yes.
Can you explain to them what's the difference? Why do I need it? Do I really need it?
Yeah, of course you really need it. So there's 2 different types of title. The first one is called your owner's title policy. Then we have your lender's title policy. If you're getting a loan, you have to get the lender's policy.
It's mandatory.
Not an option, right? Gotcha. Unless you're a private lender, something like that, but most people aren't in that's not a common position to be in. So for the lender's policy, the reason they make you get it is because they want to be protected. So that should be kind of a hint to you, well, if they want to be protected and they've invested X amount of money for my loan, what about me? Should I be invested? Yes, because your intention is to keep this house, make a profit, hopefully, possibly sell it, and then get a new investment. And if you're making an investment here in this area, the metropolitan area, Maryland, DC, Virginia, Pennsylvania, you're looking at 300 and above, usually for single family homes. You don't really see anything under that. If you're buying a television set that costs $1,000, men usually get the warranty for $99.
True.
And how much is that? What percent is that? That's almost 10%.
10% on what you're asking.
Right. On a purchase transaction, you might spend $1,500 to $2,000 on your policy. Compare that to the amount, it's not even 1% of your sales price that you're spending. So to me, it's very, very valuable. The most common thing that we get is in the future when you go to sell your house, there might be what's called an unreleased deed of trust. What does that mean?
Yes.
That means that if Chris bought a house 7 years ago when you bought it from Mr. and Mrs. Smith, maybe there was a loan that hasn't been released in the bank, in the courthouse, which happens probably a little bit less than half the time. But what happens, let's just say that that loan really is not paid off when you purchased it and it was $100,000 or $200,000 loan. Do you want to have to find out who that was and possibly pay for it? No.
Not at all.
So when you have your owner's title insurance, you present your policy, and then us as a title company, usually within 1 to 2 days, we get a letter from your policy stating it's okay. When Chris bought this house, he bought it free and clear. If that loan really is not paid off, we will pay it off.
Okay, I see.
Problem solved. If you don't have an owner's policy, then someone needs to find these people, Mr. and Mrs. Smith, from 7 years ago when you purchased the house. That's problem number 1. Number 2, where's the bank? Because it might have been Wells Fargo, it might have been SunTrust. We
like
don't know.
some Christian's bank, right? Basically, right?
Chris Gonzalez
that
bank.
they went bankrupt and then like they left forever. In that instance, what do you recommend? Basically, of course, calling you guys to say, hey, can you guys help me assist me with that? What do you recommend?
Yes.
Something
So
never
if
that
something were to come up with that, the first thing we're going to ask you is, where's your policy? If you don't have your policy, where's your settlement statement when you purchase the property? That will say it on there. Us as a title company, if you buy title insurance, we actually put it on your deed because that's recorded in the courthouse. That way, if we need to, we know who your underwriter is.
Since you mentioned that for buyers, for new buyers like yourself that you're listening, right? What do you prefer? I win a contract, and then of course, you guys take over the first day contract. What do you suggest on doing? Checking out the property. There's any liens, any tax liens? Because I've seen a lot, and I heard a lot that's an issue. While the process keeps going, yes, right, and then we're like, oh, we're stuck, and we don't know, and the seller doesn't want to pay. What do you suggest in doing? Best practice.
An actual title work to pull title for you, it's cost between $120 and $150. That's what the actual title work cost. So if it's a property that you really, really want to know ahead of the game, pay the price and then go ahead and get it. However, everything will be done during the process of getting the loan and everything else because we still have to pull title. And then we will issue the policies, one to the lender and one to you. And then you'll know everything that's on there. Most of the times when you're buying the house, the buyer won't necessarily be affected, it's the seller.
Seller will be affected.
And so, agents sometimes know, sometimes they don't know, but the most common is that unreleased deed of trust.
Okay.
And most of the times that loan is paid off. The problem is the bank got a little lazy and never recorded the release. So then it looks as though it's outstanding, but it's really not.
What would your best advice for buyers to look at? I know you see this a lot, but sometimes they ask me, we had a little bit of clients that either they got married or not married. Can you advise them, the audience, right? Okay, especially our community, all right? Sometimes we like to think that we're married, but we're not married, right? Well, what would be the best common?
So I'm going to give you two pieces of advice, very, very important advice. So if you're married and you want to sleep well at night with your husband or your spouse, you should put them on title. But again, that's a very personal decision. Nowadays, there's a lot of blended families. I'm one. So you really do have to think twice who you would like on your title. But in general, again, generally speaking, if you're married, there's a purpose why you're married. And because you care about that person, if something happens to you, you expect that person to take care of you and vice versa.
Absolutely.
So if you have both spouses on title, if one of you, something happens to you, you pass away, then title is fine. It'll automatically pass to that surviving spouse. Automatic, you don't need to do anything else and you're protected.
And they can sell the house if someone passes away without no issues? Or?
Right. Without any issues, you present the death certificate and that's it, you're done. The same thing would happen as joint tenants. That's another way to help.
Exactly.
Yeah, so
Exactly.
The way I like to break it down is if you're buying with family. Chris and I say we're cousins. We want to buy a house together. Or brother and sister, we want to buy the house together. Joint tenants. Why do I recommend joint tenants? If something were to happen to you, I have faith that you'll say, oh yeah, Judy and I bought a house together. It was an investment because we both put in half and half. Okay. I will give her heirs their share. I don't need to go through probate, have a will, and everything else. I trust Chris.
Nothing through the court.
That he will do the right thing. So that's joint tenants. And that would be something, if you're in a relationship but you're not married, that's what I would recommend. Especially if you're, on the road to get married, because that's joint tenants. If something happens to one of us, not to me, the other person, the surviving, they call it a surviving joint tenant, would acquire the property.
Okay, gotcha.
Yeah. The last one that they could get the property is tenants in common. Tenants in common would be if Chris and I, we're not strangers, but say we're business partners and we buy a house together. So if something were to happen to us, the person that passed away, their share would go to the heirs, not to one of us.
Oh, I see. Gotcha. So
that's the difference in tenants in common.
Okay, gotcha. What's the normal thing that you normally see? I mean, sometimes we as agents try to advise clients. Do you add someone into your policy? I mean, to your insurance policy or whatever not?
To your deed.
To your deed, right? Do you suggest that you do it right in the middle or like at the very end, right? Because everybody always, I want to put my uncle, I want to put my brother, I want to put. What's the best recommendation on buying a property?
Right. So in general, if you're married, tenants by the entirety. That's pretty much the norm. Joint tenants, if it's family, joint tenants. If it's a business partnership, tenants in common. That's the easiest way to look at it. However, again, with blended families, different situations, you may want something different. So it depends. If something happens to you, where do you want your share to go? Do you want it to go to the other person that's on title with you, or do you want it to go to your heirs? And obviously, if it's your spouse, parents, it'll go to them automatically just because of the relationship, what they say next of kin. Yes, but sometimes you do want tenants in common. But there is a caveat. Of course, everything is not so simple. If there's a lien, say Chris and I are doing business together, and I think Chris is a great friend. However, I kind of sort of know that Chris doesn't pay his credit cards. So you want to make sure that whoever you're doing business with, you're taking all of that into consideration, because when you do tenants in common, if there's something that's recorded in the courthouse against only one of you, it can attach to the property.
Interesting.
If it's joint tenants,
hope you guys know that, right? Wow.
It has to be against both of you in order to attach to the property. So that's the part, because then people are like, I'm going to do a tenants in common because if something happens to me, I want it to go to my heirs. Okay, but now you've opened yourself up to possible more judgments that could attach to the property. So that was one of the things, one of the advice that I was going to give you. The second advice, and here it goes,
please
Chris.
share with the community, because sometimes people want to know a lot, and
yes, so it's
amazing.
It's kind of two-sided. So a lot of people, when they buy a house, they're very excited and they want to buy the house, but then their lender comes and says, you don't qualify, you need a second signer. So Chris, what do you tell them as an agent?
Please find a second signer.
And that's really Chris's job, because Chris is only supposed to find the house, willing and able buyer, and you're done.
Yes.
So sometimes lenders will say, well, ask your coworker. I've had this happen. And then, especially a first-time home buyer may not understand exactly what it means to have a co-signer. So if you're a co-signer, meaning you're signing the note and you're on the deed, remember, even though verbally you may have said, this is my house, you have nothing to do with it. You're just,
on the name of it, everything.
Yeah, you're just helping me with your credit.
Thank you. That's a difference, right? Big difference, right?
Yes, I've had someone take, $80,000 from them because they said, well, I helped you buy this house, and now you want to take me off of title. No. So again, think about it at least 5 times before you add someone on your title. And the second part of that I want to tell you is I do get the question a lot, Judy, but my spouse, she doesn't have a legal status here. She doesn't have a social. Can she still be on my title? Yes, of course. In the United States, anyone can buy property through a loan or cash, even if you don't have a social, even if you only have a tax ID, even if there's no legal status. No one is going to stop you from buying that house as long as you qualify either in cash or for their loan. What happens when you buy the house? Absolutely nothing different than anyone else buying a house with a tax ID or social. With a tax ID or social. But what is the problem that most people talk about? When you sell the home, Chris, you have to remember you'll have taxes to pay at that time. So, and that's really the only problem, money. Nobody wants to part with their money.
Everybody want to pay taxes.
Yeah.
Anybody else but yourself. Keep the rest, right?
Yeah, so just so that you know, nowadays, in today's time, it's 10% for federal and it's 8% for the state.
Wow.
Okay?
So
the federal part is off of the sales price.
Okay.
So $100,000,
$10,000.
$10,000. The state part is off of the net. So maybe if you have a loan for 80, then you're only netting 20, so then you have to pay 1,600.
You got that right, guys? This is awesome, because sometimes investors too, also investors ask those questions. Well, how much am I going to pay? How much am I going to pay?
Mm-hmm.
Well, you guys can calculate so much, but you're not a tax advisor in terms of getting that done. But yes, you're right. I mean, anybody, even cousins, brothers, they get involved in a transaction. They're like, okay, you're going to pay this, you're going to pay that, right? And I'm glad you brought that up, because...
And remember that when you make an investment to buy a house, just because you don't have a legal status, but you have the money, don't let that stop you from buying the house.
Okay.
Please don't let that stop you from buying the house. And I can give you examples. Maybe we could do another one of these, right? Actually give you an example of people that I've had sell a house. They had no tax ID, they had no legal status, but they still sold their house, and everything was fine.
So basically, what you're saying, you can buy a property with or without a tax ID number, or
people from China, Italy, Australia buy property in the USA every day.
Every single year, every single month, every single day. So
and our Canadian friends, they like to do that.
So what will be one of the biggest concerns that you always have to teach people not to do what to do? I think you you talking about great topics right now that I myself also getting to learn, right, from you, because you've been in the business so many stories. We can go on and on and on. But what's the most typical thing that you've seen last year, especially with the tax ID numbers, stuff like that? Can you recommend the audience, say, well, you know what, before you buy, don't do this. What is it don't do?
Don't put somebody on your title that you don't know very well. That would be my number one advice ever in life in general.
You cannot sell it, right? Because you need permission from the other person too as well.
Yes,
Even though it's my co-signer.
Even though it's your co-signer, it was your friend during the transaction. That's not what happens all the time at the end. And unfortunately, that's the part where I'm involved. And even if you're talking about someone with a social, someone who's qualifying normal, when they come in with a boyfriend and girlfriend, they buy the house, say somebody puts down the deposit 5 years later, that boyfriend is gone or that girlfriend is gone.
See, what happens in that instance?
And then,
I mean, can you file a report of, like, you know, a
missing
person?
person?
And then, like, okay, I cannot sell my house because I'm stuck.
Yes.
What would you
Actually, there is a wonderful solution, but everything costs money. Everything is time. Yes, and most people don't want to do that. So I haven't had one, thank goodness, last year. I can maybe recall one, but I do get cases. People call me 5 years later and they say all these nasty words, and, you know, he or she left, and, you know, I want them off my deed because now I'm selling. First thing, my first question, where are they? I don't know, they went home.
They got
Meaning
lost somewhere, right?
Another country. Okay, well, you have to find them. That's not my job. And that's why I say think about it, and that's why that's my best advice to you. That's the number one. You might find them. They might say, oh, you know, we need a little bit, you know, for my aggravation. Okay, that's number two.
Gotcha.
The third one is, yeah, you know, I'll sign, no problem, but how much is it really going to cost you at the end if they're nowhere to be found? Now you have to file a court case, and I'm telling you that's going to be at least $5,000 to $8,000 minimum, plus the time, 6 to 8 months, because you have to
go through a process,
look for the
right?
person.
Legal process.
Yeah, look for the person,
make
just
sure that
like
he
you said at the
forever,
beginning.
right? Or whatever not.
Did they die?
Wow, okay.
Is there an heir?
Would a will or something, or power of attorney, would it work out? Let's say, you know
Power
what?
of attorney.
I'm leaving somewhere and I'm not sure if I'm gonna come back. Can I sign the power of attorney and then you take over whatever you're gonna do? Is that okay?
That's possible, but the power of attorney is only worth as much as the person that's going to accept it will value it as. So, for example, here, if we get a power of attorney that's over 2 years old, we need an explanation. Why is this 2 years old? Is the person, you know, not talking to you? Then that's not okay, because we don't know, is the power of attorney still valid? So we like to see power of attorneys that are within 2 years. Okay. I'm not saying that we wouldn't accept something that's 10 years old. We just need a good explanation.
Yeah, right. We'll review it and see if it's legitimate and all that great stuff. Okay, at least that's a possibility, right?
Yes, but just think about it. At least I used to say 10 times, but then I didn't want to scare people, so I started saying 5 times. We still want you to buy the house.
And well, finally, then I know you gotta have appointments and whatnot, but for agents out there that are listening to you, right? Not only Smart Realty agents, but other agents, what would be best for us to prepare us as an agent to help you guys move faster? What would be the best process? Just can you give us
contact information?
Okay.
Contact information.
I'm bad at that. Sometimes I do it very, like, 2 weeks later after I get a contract. That's right.
Contact information, because if
what
we
do you
have
think
it,
that's
then we
important?
can call them.
Okay.
Yeah.
Okay.
So then we can call them and discuss different situations for them. You know, there's different types of deeds we could do. Sometimes people say, oh, I want to gift the property to my son, my daughter, I want to put them on the deed. That may not be the best solution for them. Sometimes there's something called a living trust that we could do. Okay. It's the same as a regular deed. You could do it when you actually purchase the property. So if we have contact information, then we can call. Or if your client already has questions, you can say, oh, well, you know, call Judy, call the office, and they can help.
Likewise, same thing with the listing agents, right? If I'm a listing agent, of course, the buyer from Smart Realty come over and send the contract, we're going to close with you guys. Yes. Do you want my seller's information as well? Is that something that is important?
That's important as well. Okay. Just in case, you know, something comes up with title, but just, you know, to let it out there right now, Baltimore City is so delayed in lien certificates. If you're getting a listing from Baltimore City, please ask your seller to order that lien certificate now. They're at about 6 weeks. So normal time used to be 10 days.
Since you brought that up, so people that are buying in Baltimore right now, I have to structure the contracts in Baltimore for my buyers in a 6 weeks radius or 7 best practice.
Yes.
Because we wouldn't be closing on time like a regular 30-day, 45-day.
No. No, unfortunately.
Thank you.
We
So
have
I'm learning
had,
something new today.
Yeah, we have had some luck where the actual client, the buyer or the seller goes down to Baltimore, and we were telling them, go get it yourself in person, and they would give it to them. But now I think they caught on because the last person, 2 people that went, they told them no, they would not.
Wow.
They're trying to get better. They're actually talking with our organization, the Maryland Land Title Organization, with Baltimore City to try to improve on their time, because to go from 10 days to 6 weeks is just not acceptable.
Has that changed anything with COVID though? I mean, the COVID rules back in days, I know it was a little longer, but has that improved?
Well, their excuse is
Kumar?
COVID, that now they're backlogged, that they lost some people in the office, but you know, Chris, COVID, we know how
Thank
to
you for
live it.
telling me that,
Yeah.
because we can structure contracts in a different.
And they cost
days.
$55. So it's not something that's expensive. So if you just tell your seller, hey, if you're going to list the property, let's go ahead and get the lien certificate now, then that way you know what's going on with the property.
In Baltimore, basically, right?
Baltimore
Montgomery
City.
County's okay. Right?
Montgomery County, Baltimore
Montgomery
County,
County. Okay, Baltimore
Frederick, everybody else. Virginia didn't lose a step. There's still one day you can record in Virginia.
Okay.
They're wonderful.
Well, I think this is great information. That's why I wanted to actually take her time. I know her time is very valuable, guys. And it's something to teach us, right? Because we don't know sometimes at the beginning of the transaction. They go through a process, right? And I believe you guys check everything through the title. There's any liens on the property that, you know, that mess up the contract for them.
And do you have any recommendations for us to make agents' lives easier?
You know, and I think the best way is for everybody as a team, right? We're a team, right? It's
Definitely
communication,
a
right?
team
Open
collaboration.
communication. That everybody's got to be on the same page. Even though if my client doesn't answer, you guys contact me. I contact the client. It's all about communication. You know, every single day. Because I tell my clients, as long as we get a contract, we're bleeding days, right? Meaning to say that each day is even Saturday or Sunday, right? Even though you guys, as long as are not working, but I know you're closing on Saturdays. But at the same time, every single day for us is important on a contract. You know, but thank you. I think. This is awesome, and I appreciate your time.
Sure, no problem.
Anything you can
Anytime.
tip? Any final words that you want to give agents also, or new buyers?
Well, for new home buyers, thank you so much for still buying. I understand, you know, rates can go up a little bit, but the most important thing is that you buy that most important investment in your life, the house. If you have it now as a young person, you know, 20s, 30s, 40s, that's still young considered for me.
For us, like right now, back in the day, oh my gosh. Yeah, you're right.
Buy the house. You know, things don't stay like this forever, but buy the house. If now is the time for you to buy the house, buy the house. Don't let someone else sway you not
It's
to
always
buy the house.
A good time is a good time to buy any property.
Yes.
Regardless of the rates.
When you are ready, buy the house.
Well, you guys, this is of course Judith Campos. She was very nice for me to take this video, and hopefully you took something before you buy. Think about it, piénselo, before you add somebody into the
To the deed, yep.
Well, share the video. Thank you so much. And then once again, any questions you have, please reach out to me, and I'll put this video in a different format so you guys can enjoy it with your family. Okay.